You are being hunted. Right now, Wall Street elites and algorithmic supercomputers are engineering a trillion-dollar AI slaughterhouse designed to obliterate your life savings. Watch until the end to uncover the three invisible forces rigging this game, or become their next casualty. Close your eyes. Smell that? It is the distinct, acrid stench of $1 trillion burning to ash, masked by the intoxicating perfume of a technological miracle. We are sitting on top of the most devastating financial time bomb in human history, and most of you are happily dancing on the fuse. You are being lied to, manipulated by a system that desperately needs your blind greed to keep the illusion alive. Today is August 10, 2026, and I am telling you that the slaughter is already scheduled. Before I pull back the curtain to show you the three invisible forces engineering your financial demise, I need you to hit that subscribe button right now. Do it to support this channel, so we have the unrelenting drive to keep producing these life-saving videos. Because what you are about to hear is the only thing standing between you and absolute ruin. Welcomes you to the brutal, unfiltered truth of the market. Now, keep your eyes closed and let me drag you back to the turn of the millennium. The 1998 to 2000 era, the Wall Street circus was putting on its greatest, most tragic comedy, the dot-com bubble. You did not need a viable business model. You did not need a path to profitability. All you needed was to slap a .com at the end of a worthless corporate name, and suddenly, retail investors treated you like royalty. Do you remember the absolute absurdity of Pets.com? A hollow shell of a company selling dog food over the internet, incinerating tens of millions of dollars on a Super Bowl commercial featuring a sock puppet, only to rake in absolute pennies. What was the grand finale? Total annihilation. The bubble detonated, the Nasdaq violently evaporated by 80%, and millions of everyday investors were permanently erased from the financial ecosystem, left holding worthless paper while their life savings turned into dust. It was a vicious, agonizing lesson in human hubris, a testament to our blinding overconfidence when faced with a shiny new technology. Yet, look around you today. We are suffocating in the exact same toxic air. The stench of the year 2000 has returned, heavier and more putrid than ever, just packaged in a sleek, expensive new bottle labeled artificial intelligence. We are standing in the dead center of a ruthless psychological war, torn apart by the primal madness of the herd. On one side, it is FOMO, the agonizing fear of missing out, driving you utterly insane as you watch your clueless neighbor buy a new house with his tech stock winnings. On the other side is FOL, the paralyzing fear of losing everything, a cold sweat that drips down your spine every time the chart violently spasms like the EKG of a dying patient. Sir John Templeton, an absolute legend in investing, warned us that the four most expensive words in the history of finance are, "This time is different." Look at the so-called experts on television right now, practically screaming that AI is the undisputed mother of all revolutions, promising that it will permanently alter global GDP and swearing that these astronomical, logic-defying PE valuations are completely justified. It is nothing but venomous lip service. In this video, I am going to ruthlessly expose the three underground forces that are desperately pumping air into this gargantuan AI bubble. My mission here is not to terrorize you. My purpose is to be your guide, to physically drag you by the collar out of this lethal trap, and to protect your hard-earned wealth before a massive wave of retail accounts simply vanishes into thin air. There is no "this time is different," my friends. To truly understand how we arrived at the precipice of this financial cliff, we must first look at the architects who built it, the venture capital syndicates and Wall Street institutions running a perfectly closed loop of hype. The first invisible force driving this madness is an incestuous ecosystem of institutional capital that simply cannot afford for the AI narrative to fail. You have to realize that these Wall Street behemoths and Silicon Valley titans are not passively observing a technological revolution. They are manufacturing a financial one out of thin air to save their own balance sheets. We are witnessing a grotesque game of musical chairs played by billionaires who are quietly coordinating to keep the music deafeningly loud. They fund unproven startups at multi-billion-dollar valuations, pass those inflated assets back and forth among their own private equity circles to establish a fake market price, and then rely on compliant media networks to broadcast these astronomical numbers to the masses. It is a masterful psychological operation designed to establish a false consensus of infinite growth. When you turn on financial television and see a hedge fund manager weeping with joy over the future of large language models, you are not watching an objective analysis. You are watching a desperate salesman hyping his own severely over-leveraged book. These institutions have deployed trillions of dollars into the infrastructure of a technology that is entirely experimental, and they are terrified of the impending reality check. So, what do? They engineer an echo chamber so loud and so pervasive that it overrides your natural instinct for self-preservation. They sponsor aggressive research reports projecting ridiculous total addressable markets for AI by the year 2030, pulling numbers out of the sky to justify stock prices that defy all historical laws of mathematics. It is a parasitic relationship where the hosts are the everyday investors, conditioned to believe that the smartest guys in the room have it all figured out. But behind closed doors, in the mahogany boardrooms where the cameras are turned off, these same institutions are frantically hedging their bets, quietly preparing their parachutes while explicitly instructing their wealth managers to keep pushing you into the engine of this runaway train. They know the valuations are a hallucination, but the entire machine relies on maintaining the illusion just long enough to offload their toxic, overpriced bags onto the public market. While the institutional titans are busy inflating this grand illusion in their private boardrooms, they are simultaneously and meticulously preparing a trap for their ultimate prey: you. The second force engineering your demise is the weaponization of market mechanics, a brutal system of algorithmic manipulation designed to extract every last cent of liquidity from the retail investor. Wall Street has always needed a greater fool to finalize their profit extraction. But today, they do not just wait for you to make a mistake. They actively force your hand through high-frequency trading and the gamification of the stock market. You are no longer trading against other human beings who are analyzing balance sheets and cash flows. You are stepping into a digital coliseum unarmed, facing off against supercomputers that process millions of data points per millisecond, specifically programmed to hunt your stop losses and exploit your emotional triggers. They have deliberately turned investing into a dopamine-fueled casino, feeding you a constant stream of alerts, flashing green lights, and community forums that amplify the tribal frenzy of the AI gold rush. This is not by accident. It is a calculated design meant to induce panic buying. When you see a tech stock violently gap up 15% in a single afternoon on no fundamental news, that is not organic demand. That is algorithmic scaffolding pushing the price to extreme psychological thresholds, creating a visual representation of FOMO that breaks down your rational discipline. They want you to capitulate. They want you to stare at the screen, exhausted by the fear of missing out, until you finally abandon your risk management and hit the buy button at the absolute peak. And the moment you do, the moment the aggregate retail capital flows into the trap, the algorithms seamlessly flip. The bid disappears. The very same computers that drove the price to the heavens begin ruthlessly shorting it back into the dirt, executing a perfectly timed wealth transfer from the middle class to the elite. Millions of average people are unknowingly serving as the designated exit liquidity for institutional giants. You are the cushion they land on when they jump out of the burning building. This algorithmic manipulation preys on human psychology so effectively that victims often blame themselves for their losses, completely unaware that they were participating in a rigged game where the executioners controlled the speed, the price, and the narrative from the very beginning. But even the most sophisticated traps and the loudest echo chambers eventually collide with the unforgiving brick wall of mathematical reality. The third and final force that will detonate this bubble is the catastrophic fundamental disconnect, a terrifying black hole of capital expenditure that is completely devoid of real-world profitability. I want you to look past the flashy headlines and stare directly into the cash flow statements of these supposed AI empires. The entire narrative rests on the premise that businesses and consumers will pay exorbitant premiums for artificial intelligence services. Yet the math is a bloodbath. We are witnessing the most aggressive infrastructure build-out in human history, with mega-cap tech companies incinerating tens of billions of dollars every single quarter to hoard specialized microchips and build massive data centers. They are spending money like drunken sailors on shore leave, desperate to win an arms race that has no defined finish line. But here is the devastating secret that no one on Wall Street wants to whisper out loud. The actual revenue being generated by the end users of this technology is a rounding error compared to the capital being destroyed to create it. Who is actually paying for this? Where is the killer application that justifies adding $5 trillion in market capitalization to a handful of companies in under 18 months? It does not exist. We are trapped in a delusional build it and they will come fallacy. The current tech landscape is a circular firing squad where companies are just selling hardware and software to each other, booking the revenue to inflate their quarterly earnings, while the actual consumer base remains completely indifferent. You cannot sustain a trillion-dollar industry by selling digital parlor tricks that write mediocre poetry or generate slightly distorted images. For AI to justify even a fraction of its current valuation, it would need to replace human labor and generate corporate profits on a scale that defies the laws of physics and economics. Instead, we are looking at a classic infrastructure overbuild. Eventually, the chief financial officers of these Fortune 500 companies are going to look at their budgets, realize they are bleeding cash on AI subscriptions that offer zero return on investment, and they will pull the plug. When that corporate spending halts, the revenue mirage will evaporate overnight, and the massive valuations propping up the entire stock market will collapse under their own crushing, unsupportable weight. When this catastrophic collision between infinite hype and finite reality finally occurs, the fallout will be merciless. But you do not have to be among the casualties left bleeding on the battlefield. You have a choice right now, in this exact moment, to wake up from the collective hypnosis and step out of the slaughterhouse before the gates are locked. Surviving the impending AI market collapse requires something far more difficult than intelligence. It requires supreme emotional fortitude. You must be willing to stand alone, to look foolish in the short term while your friends and neighbors boast about their imaginary paper wealth, knowing with absolute certainty that the tide is about to go out. The first step in your survival protocol is ruthless detachment. You must entirely strip away the emotion from your portfolio and audit your exposure to this bubble. If you are sitting on massive, unjustified gains in the tech sector, now is the time to secure your financial future, to take those chips off the table and walk out of the casino while the dealers are still smiling. Do not attempt to aggressively short this market, because as history has proven, irrational exuberance can outlast your solvency. The game is not about predicting the exact day and hour the fuse will reach the powder keg. It is about refusing to sit on the explosive altogether. Shift your focus toward the unglamorous, neglected corners of the economy. Seek refuge in hard assets, cash equivalents, and fundamentally sound businesses that produce real cash flows from real humans, rather than empty promises of a digital utopia. Wall Street wants you entirely deployed, fully invested, and fully vulnerable to their inevitable rug pull. Cash, right now, is not trash. It is the ultimate financial weapon. It is the dry powder that will allow you to buy the wreckage of phenomenal companies for pennies on the dollar once the dust settles and the tourists have been thoroughly eradicated from the market. Remember, wealth is rarely created during the manic blow-off tops. True generational wealth is forged in the ashes of the aftermath, by the few who had the discipline to wait. You are now armed with the brutal truth of the three invisible forces manipulating this market. The countdown has already begun, and the decision you make today will permanently dictate your financial legacy. Stay vigilant, stay disciplined, and never let the madness of the herd dictate the safety of your family. The texts presented reflect deep concerns and strong anxieties regarding the current state of technology investments, institutional influence, and market valuations. They highlight a profound feeling of unease about rapid technological advancements, particularly in the artificial intelligence sector, and the massive influx of capital surrounding it. For many individuals, watching sudden market movements, algorithmic speed, and massive corporate spending creates a very real sense of vulnerability. It can feel as though the market is fundamentally disconnected from traditional economic realities. These perspectives strongly emphasize the emotional weight of investing in a hyper-connected era where information and stock prices move at lightning speed, often leaving everyday investors feeling overwhelmed or entirely sidelined by complex institutional momentum. While historical market cycles, technology valuations, and the mechanics of trading are always subjects of intense debate and varying objective interpretations, the core sentiment expressed here is deeply rooted in a natural human desire for financial safety and transparency. It underscores the immense psychological pressure individuals face when navigating periods of high market enthusiasm and rapid structural change. Acknowledging these fears is important, as it reminds us of how stressful long-term financial planning can be in unpredictable environments, highlighting the deep-seated instinct to protect one's livelihood, future, and family from perceived economic instability and sudden shifts in market dynamics. The most enduring lesson to draw from periods of intense market enthusiasm is the importance of emotional regulation and independent, grounded decision-making. High-stress environments often amplify fear and the anxiety of missing out, FOMO, which can easily cloud rational judgment and lead to hasty financial choices. In your daily life, apply this by establishing a personalized, well-diversified financial plan that aligns with your specific risk tolerance and timeline, rather than reacting to daily headlines or market hype. Focus on fundamental practices you can control, building an emergency fund, managing debt, and consulting with certified financial professionals when making significant choices. When feeling overwhelmed by the fast pace of modern markets, or the latest technological trends, take a step back. Practice patience, prioritize your peace of mind, and remember that long-term stability is generally built through consistent, measured actions, rather than attempting to perfectly time unpredictable market movements. How do you personally stay calm and manage your financial decisions when the market feels especially volatile or overwhelming? Please share your thoughts and strategies in the comments section below so we can all learn from each other's perspectives. If you found this discussion helpful, please subscribe to the channel to support our work and help us create more content like this in the future.